Chris is in Myrtle Beach. Hey, Chris, what's up?
How are you?
Better than I deserve. How can I help?
Hey, man. Well, we are an actual exterior cleaning company. I run Rivertown Pro Wash. We've been in this business for about 18 years. The last 4.5 years, we've been full-time in the business. We left the corporate world in 2019, went full-time. So our revenues have jumped and jumped and jumped. 19, we did 116, and in 20, we did 205. 21, we did 298. And last year, we closed out the year with 547.
Whoa!
Yeah, and just house washing. So
High hockey stick up and to the right, baby. Woo!
Yeah, God's been good to us. He's blessed us incredibly. This year, we're on track to hit right close to 1 million. So,
how many people on the team?
So we've got 7 people on payroll. We've got 3 technicians in the field. I've got me and another guy doing sales, and then I've got 2 office staff, one doing the back-end office staff, the thank you cards, the follow-up emails, and my wife running the front office with scheduling jobs, scheduling customers, answering the phone when the leads come in. So that's our team in a nutshell. Our question is, last year we did 547. Our net income, our taxable income off of that was around 85,000. I feel like that's a little bit low because we're debt free, like we're totally debt free, and we just run our P&L from this year up through July, and so we're already at 405 this year. And it says we've got net on the bottom of it at 101,000. But I don't have anywhere near that amount of money in the bank. And my question is, where's all the money going? I can't get my head wrapped around.
Who's doing your books?
So I've got an external bookkeeper, and he does my taxes and all, and he's a CPA, and he's QuickBooks certified. And so he's doing my books, but talking with him is a little bit like talking to somebody that's not engaged, because I can't really, I can't get him to teach me.
Yeah, you need to get a new bookkeeper.
Okay.
Because this guy, his part of his job is to show you how your business is running through the numbers, not just produce a P&L. And he's doing a 7th grader's job of producing a P&L. And because your job is to know your numbers with that P&L's done right will talk to you and tell you things about your business. When you look down that P&L, you'll go, fuel costs shouldn't be that high. Where are we buying our dadgum fuel? Or you'll look down and you'll go, what's the maintenance running on this stupid? We got to get a different brand of washer. These maintenance is driving me nuts. Your business, your numbers on your P&L will talk to you. Or you'll go, we're paying that guy. What? What are we paying him? And you go, what? I look down at and so, there's 3 or 4 documents that you need to be looking at in detail, and you need to allocate in your day at least 2 hours a week to this at your stage, personally. And your job is not to produce the documents, but your job is to look at them and to put someone in place that can teach you what you're looking at. So, yes, you need a profit and loss statement, but it needs to be detailed. And a profit and loss statement has what's called a chart of accounts.
It does. And
so you've got a list of, categories of what these expenses are. And if that chart of accounts isn't sliced thin enough, it's got big, broad categories, then those numbers aren't talking to you. You got to slice it thinner and let them talk to you. And it will teach you what's going on with the business. These P&Ls should talk to you. And if they're not talking to you, they're not being produced correctly. And if the person that's producing them correctly can't talk to you where you can understand it and where they can help build this, because their job is not to prepare you to do your taxes. Their job is to give you documents that help you run your business, called P&L and called a payables list. Do you have receivables or do you get paid cash on the barrelhead?
No, we're usually cash on the barrel, but we're getting a small amount of commercial starting, and so some of that is 60 and 90 days out.
So you got to run a receivables, and then you need a cash flow statement. Where did the freaking, what you said a while ago, where did the freaking money go? I need a one-pager that shows me where my money went. Because otherwise I start thinking one of you goobers stole it.
Right. It's like a ledger. Like I'm reading these books on how to run a P&L and how to run documents, and I'm thinking, what is a stinking ledger? So I'm reading through this book, and I'm like, my man's never told me about a ledger. I mean, do I need
a ledger's fine. We use a modified cash flow statement because we don't, you're running on a cash basis, and you should be at your level. Okay. Don't let them get you into accrual. It'll drive you bananas at your stage. Okay.
Yeah.
Later on, when you're over 10 million, you'll have to go. 12 million, the IRS requires you to go to accrual. So we've been at accrual for years, but we do a modified accrual so we can manage cash because we live like you do. We live cash to cash.
Yes.
So even though it's got a different set of zeros than when I was your size, but still same principle. So I have a one-page cash flow statement. I need to know where the money is. Why do I feel like if I'm making this profit that there's nowhere near that in the bank? I need to know why.
Right.
I need to know why. And you give me a piece of paper that shows me exactly why, and it really is not rocket surgery. I mean, it can be put together, okay? And if this guy's not the guy, he's just he learned bookkeeping, but he doesn't even know enough about business to cause these numbers to talk to you. That's what's bothering me. You may have to get a different one. You can give him one more chance to grow the heart of a teacher and to help create these documents that will show you. But you need a P&L, you need a payables list, and you need to go through every line of your payables every week.
And we did P&L up until this year. I give it away. My wife ran it in the office. But when we hit $500,000 last year, she said, honey, I think it's getting out of my league.
Well, you may want to put somebody on staff.
Okay, and that may be what we need to do.
You may need to staff it. But again, the person that you staff it with, the problem with accounting people is they're taught how to do accounting, and they don't know beans about running a business.
Right.
And so the accounting satisfies their accounting professor, but not their boss. You follow me? So, that's what you got right now. This guy would pass his accounting test with his accounting professor because he's using generally accepting accounting principles. I promise you, he's probably not doing the books wrong. He's probably not stealing, but he's academically correct. But the practical application of the academics is where he breaks down. They don't train them how to show business people where their freaking money went, which is the whole purpose of accounting after all. But somebody somewhere in the accounting academic world forgot that, right? And so you end up talking to them, and they're talking like Charlie Brown's teacher. Wah, 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 wah. What the crap are you saying, right?
Right.
Okay. Yes. And I've had these conversations for 30 years, man. And so can you imagine being interviewed to be my CFO after you and I have had this discussion today? Oh, my God. So, our CFO actually has common sense. It's amazing. So, so that's what you're looking for. You got to get English out of this. He's speaking a different language. And what happens is, unless you're just weird, you start wondering if somebody's stealing.
Right. Well, it's like this. So I looked at my gross profit, and I'm looking at my COGS, all my direct costs to my jobs.
Yep.
And my fuel is ranking around 7%.
Yep.
And I'm thinking, is that high? Is it low? I don't know. We got 7 vehicles. I don't know.
Yeah. Well, but what you'll determine is over years, you'll say 7% is the ratio, or it's not, 10%, 9%, 9.2%. And you'll start to see anytime it bumps up above that, then you're going, okay, danger, danger, danger. That's a warning sign. That's your numbers talking to you and telling you how to run your business. That's the beginning of what I'm talking about. That's exactly the kind of thing you're looking for here. So you need to get with this guy and either bring it in-house, or he's going to have to step up in the quality of the production of the documents. The P&L has to probably be sliced thinner in the chart of accounts so that it's telling you in detail what's going on. Help him develop some key performance indicators, some KPIs.
Yep.
Okay? And a cash flow sheet, some KPIs, and a thinly sliced P&L, and a payable sheet. Those 4 or 5 documents you can run this business with. But
Sure.
you've got to spend enough time looking at them where you become an expert on your business. If one of our guys in one of our P&Ls comes into one of our meetings and he can't tell me his numbers on the thing we're just talking about, he'll get his butt chewed, because you can't run your business if you don't know your numbers.
Right, and that's the problem. I know my average close rate. I know my average ticket. I
Yep.
know all those numbers on the sales because that's what I run. But
You
I
wouldn't be
don't
having
know-
this success if you didn't. Now you
Right.
got to do it on the other side of the equation,
Yeah.
and that's the detail on the outgo. All of that's income.
Yes,
You're a salesman. You're a revenue machine.
that's what I am.
But you're discovering you can't out-earn your stupidity.
Right.
You got to get into the detail. You're the man. You're a stud. You're going to fix this. I can hear it in your voice. You've had it. You're done. You're going to clean it up. So I think you're going to end up bringing somebody in-house that you train maybe with a good accounting on the outside, helping you train them to speak English, not just accounting. And build the documents that tell me how to run my business better, and where my business is hurting and where my business is succeeding. Just like you're looking at those sales ratios, those close ratios, you'll look at the fuel ratio, and you'll look at your COGS, your cost of goods sold, and you'll look at all these other key performance indicators in the business. You'll discover what they are, and as soon as you start running these dadgum receivables, you're going to figure real quickly aging on those. The older they get, the less likely you are to get paid. So you don't like old receivables. I can tell you that. That's a known fact. So you're going to go back to cash on the barrelhead with a bunch of these people as soon as you start having that fun. But that's what you get into. That's fun, man. You're a stud. Get it. I love it.